Well, the COVID-19 pandemic, in fact, has impacted the world economy, and Indian economy was not spared as well. In fact, as of April to June quarter, the India GDP did contract the most, nearly around 24% of contraction coming in the April and June quarter. And this is after, if we compare it with the contraction that we have seen across the board, UK was the one nation which did contract nearly around 21 to 22%. And after that, India has seen the worst contraction as measured versus several advanced economies and few of the BRIC countries as well. Having said that, if you look at the Indian economy, well, Indian economy as of FY20 stands at a $2.7 trillion economy. And let us now understand that how does one really, the importance of GDP, what does it mean and how is it calculated? What is GDP? GDP is basically gross domestic product. It is one standard indicator to measure the health of the economy, and it is a standard indicator used across the globe. However, the way it is calculated, it differs. In again simple terms, GDP means that the monetary value of the goods and services that are produced in the economy in a specific period. For example, India produced goods and services worth $2.7 trillion in FY20. In India, GDP is calculated by CSO. CSO is the authority which calculates the GDP. It means Central Statistic Office. India's GDP is calculated by two methods. One is the factor cost production method, and the second is the expenditure method, wherein the current prices or the market prices are in fact used to calculate the GDP. In terms of the factor cost of production, it is further divided into 8 subsectors, which is agriculture sector, mining, manufacturing, construction, electricity, as well as trade, hotels, transport services, financial, real estate, professional services, and public administration and defense services. If we look at the breakup in terms of the factor cost of production, well, agriculture accounts for nearly around 15% of the India GDP. Industry forms nearly 30% of India GDP, and 55% contribution comes from the services sector, and this is as of FY20. But more or less, largely, India is on the factor side, India is largely a services driven economy. And this year or this quarter, if we analyze the GDP, then all the subsectors did contract. We did see a huge amount of contraction in mining, manufacturing, construction activity, and trade, hotel, services activity, as well as the public administration, defense activity, which also indicates the government spending. Agriculture was the only silver lining during this quarter from a GDP perspective. Let us look at the expenditure method. In the expenditure method really indicates how the various areas of the economy are functioning, such as trade, investments, as well as the personal consumption. On the expenditure side, the personal consumption denotes nearly around 55 to 60% of the India GDP, and that has taken a huge beating on account of the COVID pandemic. Gross fixed capital formation is also seen in terms of the expenditure method, and that shows the level of investment activity in the economy, and even that has seen contraction. So on the expenditure side, if we look at as of first quarter, both consumption as well as the investment activity has been hit. We also see the trade getting represented on the expenditure side, which is by the exports and the imports. These segments do form a part of the expenditure method, and the expenditure method is calculated on the market prices or the current market prices. So far, if you look at the India GDP, well, it is expected to contract again substantially. Anywhere between 5 to 11 odd percent is the kind of contraction that various economists expect for the India GDP for FY21. and a large part of the hit has already been taken in Q1. High frequency indicators are showing some amount of mixed trends, but again there is some amount of flattening of the activity in if we look at it, if we look at most of the indicators so far. Yes, RBI has put in a huge amount of measures, be it rate cuts and other liquidity measures, and also Indian government has put in huge amount of measures in terms of the stimulus to really perk up the economy, but most of the economists do expect a fairly gradual recovery from the current levels.